Welcome to the Baldwin CPAs webinar, Paycheck Protection Program, Updates on PPP Loan Forgiveness. Over the past few weeks, the Small Business Administration, in consultation with the U.S. Treasury, have made updates and changes to the forgiveness process of the Paycheck Protection Program and the application for forgiveness. These new guidelines give more flexibility to get the loan forgiven and make the application process easier for those who qualify. During this webinar, we will walk you through the new updates, required calculations, and best practices to maximize the opportunity to have your paycheck protection loan forgiven. Our presenters today are Baldwin Member Lisa Foley, CPA, CGMA, and Accountant Matthew McKirahan. And at this time, I'll turn it over to them.
All right, thank you, Leslie. Glad to be back here. It's been a couple months, I guess, or going on a couple months since we've had anything in regard to PPP, so we've all kind of taken a deep breath. So just wanted to kind of get back. We've had a lot of questions and thought it was just really time to do a webinar and discuss kind of where we are now and what the PPP forgiveness process looks like. It is a ever-changing environment, and I think one of the main things that will come out of today is I just want to put everybody at ease. And, you know, there was a lot of rush and fast and furious to apply to make sure we got the money. This forgiveness process is going to be slower. And I think what we have all learned out of this process, you know, it's a very new thing. We've never lived through something like this, is sometimes we have to be more patient, and we've learned that as we went through this process. So I think today that's what I want to come across is, you know, we're just going to, everybody needs to take a deep breath and maybe slow down a little bit, because as the PPP process in general has evolved over this year, what we have noticed and everybody's lived is things just seem to get a little bit easier as time passes, and they're making it easier to qualify, easier to spend the money. So we think that's all going to hold true on forgiveness as well. So we're going to talk about some of that today and just kind of give you your timeline and just really put everybody at ease of some of the things you need to be thinking about. And let's see what Washington does, because they are in session this week, and we really think that they're going to lighten the load on the forgiveness. So just wanted to get everybody together and talk a little bit about that, where we think it's going and where it actually is right now. So with that, Matt, I don't know if you have anything further to say.
No, I would definitely concur with what you said there, and just really looking forward to helping clients really kind of take a relaxation a little bit here, and as we get ready for August 8th, which I believe will be the next real big update for the PPP program, as I do believe there could be, we'll talk about later, but an additional round for certain industries and that nature. And so, but as we continue to wait, everything seems to be getting better and better for the client. So looking forward to seeing what they have in store come up on August 8th.
All right, so we'll just jump in and kind of just give you a little bit of timeline of what has happened since our last webinar. And so on June 10th, the SBA released a revision to the first interim final rule due to the enactment of the PPP Flexibility Act. So that's when things started really changing and getting a little bit easier from the forgiveness side, and talking about that. And then 6 days later, they actually released a new application, which superseded the application we had previously went over when we did the May webinar. So that, you know, the application even keeps changing. I know banks were supplying them, but then that's all has changed again. And we tend to think that that is going to change again as we'll move on today and talk about. So then after we get past June 16th, they released an easy application on that same time frame, and that's really going to be very helpful, I think, to a lot of people that applied, and Matt's going to talk about that easy application a little bit today, and go through the details of that. Because if you can qualify to use that, that's what needs to happen. Because the cost burden and time burden to fill out this application is really what we need to help everybody with, right? We don't want you to be out a lot of cost and a lot of time and effort to do that. So we need to take the easiest route possible. Everybody has enough things they're dealing with instead of loading on, 20, 30 hours of work to fill out a complex application for forgiveness. So hopefully the easy application will fit for a lot of people. So day later, they released more revisions to the 3rd and 6th interim final rules. So it's just been constant change. It has been very quiet since June 17th. And like Matt alluded to, we do think there's going to be a lot of things that come out on August 8th to clarify things. And that's where we've just kind of hit the timeout button and said, okay, let's not learn. We've got time for the forgiveness process, so let's not learn an application. Let's not go through a lot of calculations that's just going to change possibly again. So that's where we're at. And I think that's even more evident now that, especially in Kentucky, we're seeing an uptick in cases. So other states are seeing that. So who knows how much easier they're going to make it for this forgiveness side to keep the economy going and propped up. And this would be one way to help do that if we can ease this process. Just a reminder, you do still have until August 8th to apply for a PPP loan, and there's still more than $100 billion left. So, the money is still out there. So if you know people that haven't applied yet, I would encourage them to do that. And if they thought maybe they didn't qualify at the beginning, we all know those rules pretty well. They're not changing on that front. So we just encourage you, if you haven't applied, to reach out to us, or reach out to your lender, or if you have other business colleagues, just mention this to them. I know in the many conversations that Matt and I have had with clients over the past several months, one thing I will say is most clients have been very appreciative of this money, and it really has helped them keep people employed. Unfortunately, now we're running into some industries that are really contracting, and they've went through their PPP money, and now they're looking at having to furlough people or put them on unemployment. So I've heard and had those discussions more in the last 2 weeks. So I think the PPP really did its job there at the beginning, and we'll have to see if the government's going to come out with something else to supplement that, or what that's going to look like. But if you haven't applied or know somebody that needs to, there is still time and there still is money. So I just wanted to remind everybody about that. So we had referred to the PPP Flexibility Act. And so the big changes that came when that was released was your 8-week covered period was changed to 24 weeks. So that was the big change, that now, hey, you can do an election for 24 weeks. And that borrowers that had their PPP loan originated prior to that June 5th date, they can make an election either way. So that was the big change. You can use 8 weeks or 24. And we had a lot of people that were going to have a hard time spending it in the 8, but if they could go to 10 weeks, they were going to be fine. So I think that process had really helped to give that extension, because there were a lot of businesses, salons in Kentucky, restaurants that really couldn't be open for a lot of that 8-week period. So giving them the ability to spend that over 24 weeks is going to make that forgiveness a lot more applicable to a lot of people. So when we've been doing the webinars all along, it was the 75-25 rule, meaning you had to spend 75% of the funds on payroll, and then 25% could be spent on utilities, rent, mortgage, and a sundry of those type things. So they did lessen that to a 60%, 40% split. So that was a big help to some people. I will say that a lot of clients we have worked with, they were having trouble spending the 25% on other things. So the extension of time would help them, spend more on payroll and meet the requirements. But 40% on those other expenses is tough in some industries, but it did help some. And so the other thing that changed in the Flexibility Act is we had this safe harbor date of June 30th, that if you were back up to speed by June 30th and had all your employees back and you were up there, then they were going to give you a safe harbor for FTE requirements. Well, now with all the changes, that June date got shifted to December. And there's going to be a lot of controversy and questions surrounding that. If we don't know what things are going to look like. Are things going to be shut back down, or with these upticks in the virus cases? So the big thing I want to take away from that is we have a choice, and we have time to make the choice. In some cases, it may be better to just stick with the 8 weeks and pay a little bit back if you're not going to be able to hold or meet this FTE requirement way down the road in December. So there's just a lot of moving parts to that, but you have options, I guess, is the flexibility part of it now. All right, so the loan repayment starts at the earlier of 10 months after your covered period, or when the SBA remits the loan forgiveness funds to the lender. So I think the original loans, Matt, you may have to correct me, was it 6 months deferral on the original loan
That's
document?
correct.
Yeah.
Yep.
So originally they were a 6 month. Now that got pushed out for 10 months, and that 10 months is very significant because you have 10 months after the end of your covered period to file for forgiveness. So everybody, honestly, if you go even the 8 week covered period that you were early in the process, that 10 months still really is going to push you into February of next year to make your application and make the decisions. And we're going to talk about, maybe if some things don't change in the way things are, it might be better for you to not do it until 2021 and apply for forgiveness. And the banks are probably going to push against that possibly. And we'll talk a little bit more about that later today. But you have a long time to make the application. I know a lot of people just want to get it off their plate, dealing with emails and calls every day about that. But I really think patience is key here. We need to let all the rules pay out, and then just make sure that you're making the best choice on the latest facts and not jump to any conclusions, because things might get easier. Just like the application process changed, people maybe under-applied at the beginning because the rules weren't really clear. I think this 10-month window gives us the time to get the proper facts and make the proper decisions. One other thing the Flexibility Act did was allow employers to defer their FICA taxes regardless of getting the PPP loan. So originally it was like, oh, you don't qualify for this FICA tax deferral that they were talking about, which basically lets you defer your employer share of the FICA tax for 2 years. But now they've loosened that and said, you know what, even if you get a PPP loan, we're going to let you push that off and give you some cash flow in that regard to push that off and leave some money in the business if you need to for other things. The other big item with the Paycheck Protection Flexibility was they changed the loan maturity from a 2-year loan to a 5-year loan. And just remember, the loan is only for the portion that will eventually be deemed not unforgiven. So the forgivable part is no longer a loan, it's written off. So if there's any part that you do have to technically is not eligible for forgiveness, now they're going to give you 5 years to make that payback. Now, if you had already signed your loan documents before this change was made, the SBA has told banks, the lenders have to, they can negotiate and change that change the paperwork if that's what the PPP applicant wants. So don't be alarmed if you have the 2-year loan and you think you're going to owe some of it back. You definitely can work with your lender and push that out to the 5 years that the SBA provided for and the changes. All right, and then the other thing that they did was they created some new safe harbors to just really help applicants be able to meet the FTE requirements and really be able to get forgiveness. They want these loans to be a grant and forgiven. That is the goal of this program. So they did come out with new safe harbor rules that says that your forgiveness will not be reduced if you can document in good faith that you had an inability to return to the same level of activity before that you were at in February, or due to compliance and requirements issued by Health and Human Services or CDC, you couldn't be back up and running to full speed. So if you're in an industry that there's no way you can get back to where you were, there is some caveats and some safe harbors that they're going to throw out some of your FTE reduction because of that. So that was a nice addition to there. They haven't really expanded on that a lot. We don't have a lot of details on that. So we'll wait for a little bit more clarification, but it sounds like if we can do a good job documenting that, if it comes to that, there's a chance that that can help some clients and industries get around some FTE requirements. All right, and I think Matt is going to talk about some revisions that came with the interim rules.
Appreciate it, Lisa. Good morning to everybody. Hopefully everybody can hear me fine. We do see, just a quick note before we kind of jump into the next set of slides here, I do see questions that are coming through on the webinar chat and also the Q&A feature. So please continue to push those through. We will definitely have a Q&A session here at the end of all the slides. And so we will definitely try to get to as many questions as possible. So please feel free to continue to put those in that manner. So kind of continuing along with some updates and revisions. These are specific revisions to the 3rd and 6th interim final rules, but just some updates. Obviously with the 8 weeks covered period now being changed to 24 weeks, if we want to choose that, there are going to be some differences in terms of max amount that can be paid per employee. And so you can see there that first bullet point, if we're using the 24-week period, the now maximum amount that can be paid for an employee is $46,154. And then obviously we still have, if you elect to use the 8 weeks, kind of like Lisa had mentioned, if that is going to better suited for your situation, then we would still be capped at the $15,385 per employee during that set time period. One other thing to note, one big other change for owners' compensation. This is kind of a hot topic right now because the new EZ application is not very specific in terms of guidance on how we're going to apply this. And it's kind of vague. They give you like a one paragraph description of how to apply this owner's compensation rules. But prior to the latest guidance, owner's compensation was limited to the 8 weeks worth, which is 8/52 of the 2019 net profit up to that max of $15,385. Now using the 24-week cover period, you can now include 2.5 months worth. So kind of that switch from going from 8 weeks to now 2.5 months worth of your 2019 net profit up to $20,833. So this is going to be important because when you start walking through the EZ application, this is its own line. And so you're really going to have to be detailed and make sure we put that correct amount on that stated line on the EZ application if we're able to use the EZ application. So talking about the EZ application, it is definitely a simplified version. If I remember correctly, I call it the long form, was roughly 12 to 13 pages in length. And then when you started actually putting your employees' information in there, it's going to get even longer because you do have to do it on a per employee basis. So this EZ form is 2 pages. The first page, obviously, if you can apply for it and use the EZ form, the first page is just kind of your total numbers, whether that be for payroll, your healthcare costs, your mortgage interest, your rent, your utilities, those natures. You're basically going to put your total numbers on there and get down to a forgiveness amount, a simple calculation on this form now instead of the multiple excruciating calculations that we had to do for the long form. And then there's a second page, which is a certification page. If we remember back to when we applied for the PPP loan, we also had a certification page that we would sign off on certain things like the loan and the money was needed due to economic uncertainty. So those type statements are also on this EZ application. And there's about 7 or 8 of them, just making sure that we've used it appropriately, things of that nature that we will sign off on. And then that's it. No documents have to be submitted with it. It's just those 2 pages. Now, we obviously best practice and recommend that we would continue to make sure we have all the detail maintained. That way, in case they do come and question any of those numbers, that we have the backup to support and the calculations needed to make sure that we can prove that we did all that and followed all the compliance regulations. So there are 3 kind of boxes. If you were to go look at the EZ application instructions, there's kind of 3 check boxes, which basically get you into detail of, are you going to apply and be able to apply using the EZ form? So it's kind of asking yourself, can I use this form or can I not? And so the first one is that second bullet point there. The borrower is a self-employed individual, independent contractor, or sole proprietor who had no employees at the time of the PPP loan application. It did not include any employees' salaries in the computation of average monthly payroll in the loan application process. So that one's pretty self-explanatory. If you're one of those individuals, then you will for sure be able to use this form EZ, which will make things a lot easier. So noting that there was 3 kind of requirements, this is the second one here. And so the borrower did not reduce annual salary or hourly wages on any employee by more than 25% during the covered period. One thing to note there, that annual salary and hourly wages basically means, have you reduced the rate of pay? And so when you talk about hourly wages, it can be a little bit difficult because if you've had an hourly employee perhaps that has had a multitude of overtime during January 1st through March 31st, but didn't during our covered period, even though you haven't reduced their base rate, when you calculate the hours and things of that nature, you could have a small reduction, hopefully not more than 25%. Just wanted to make sure you're kind of aware of that as well. But so you haven't reduced the annual salary or hourly wages, and you did not reduce the number of employees or the average paid hours of employees between January 1st and the end of your covered period. So once again, if that is your situation and that we can check that box, we will be able to use the EZ form. And then the last one, it's a little bit lengthy here, so bear with me as we walk through it. I'll give you obviously time to read it here, but the borrower did not reduce annual salary or hourly wages by more than 25%, just like the second bullet point we just mentioned on the previous slide. When compared to January 1st, 2020 and March 31st, 2020, and was unable to operate during the covered period at the same level of business activity as before February 15th, 2020. And that this is due to compliance with requirements established by the CDC or the Health and Human Services that were issued during. And they give you a big window here. So if they continue to come out and we go back into this and we're on the 24-week covered period and we have some more guidance and regulations that comes down from these entities and organizations, that date there from March 1st, 2020 and December 31st, 2020 is a lot of time frame. So they have allowed in case something came back. And as you can know from the news, there's definitely been some more spiking in terms of cases. And so this would help get this loan, be able to use the EZ form as well. So those are kind of the three check boxes. If you were to go look at the instructions, that if you can mark one of those boxes, then we qualify to use this 3508 EZ form which then takes it from a 14, 15-page form down to a 2-page form, one with actual calculations and numbers, and then a certification page on the back. So I want to jump gears to a little bit of what we are hearing at this moment in time. We've been in contact with a lot of local banks, whether that be in Louisville, Lexington, here in Richmond, Maysville, things of that nature. No banks are accepting loan forgiveness applications as of now, and the reason is because they still haven't really understood their end of how the process is going to work. They haven't received final guidance. Now, granted, the SBA and the Treasury has provided us with the borrower's application for forgiveness, but the lender still has no clue on how to actually get this through the process to get it the forgiven portion, or if it needs to become a portion of that be a loan. So no bank is really accepting loan forgiveness applications as of now. And the last word I heard from a local bank was that they're probably not going to until the middle of August. And that's due to, like we had mentioned earlier, that we do believe more information will come out on August 8th in regards to what could be happening in the pipeline. Because I want to make sure, and you see the second bullet point, the Paycheck Protection Small Business Forgiveness Act is right now sitting in the Senate, and it's actively being talked about. And we had heard this a couple weeks ago and knew this was coming. That $150,000 number there, we have heard multiple numbers. This is the one that has kind of been stuck on the bill at the moment. And so what this Forgiveness Act would do would reduce the process for any PPP loan under $150,000 to a 1-page attestation form with no calculations. So basically, we're going to be turning that into a grant. We would sign off that we used it to pay employees, and that's kind of all she wrote. They would basically be turning any loan under $150,000 into a grant, and you wouldn't have to go through this long, excruciating process of forgiveness.
And Matt, I'll just interject there.
Yeah.
I did recently see a number that based on total number of loans, 85% are under this $150,000. So it would just really leave the compliance on 15% of the number of applications. It's still a big dollar amount that's left for those 15%. But if you can see where they could cut out all this compliance work that lenders, that applicants, that CPA firms, anybody that's helping with this process, if they can reduce that compliance burden for 85% of the applicants. It's also an election year. Let's throw that in there. I would be highly surprised if this bullet point you just talked about does not happen.
Agree completely. And then the last bullet point there, we had actually received an email from a local bank. Banks are asking customers to contact senators. And the American Bankers Association does have a blanket statement that can be used to email out to the senators. And mainly that is due to really trying to push the envelope of this $150,000 bill that's sitting there. We really want this to take into form and go ahead and get passed. That way it would alleviate a lot of compliance work. And so, but they are asking customers to go ahead and send an email. So we do have a copy of that, Lisa, if I remember correctly. So we could definitely pass that along as needed.
Yes.
Some
And I
other
will
things.
say, I'll interject there. I know really all the banks that we've dealt with mainly are not taking applications. I did have a client email yesterday, said that a bank in Ohio was pushing them to get their documents in. So just wanted to kind of throw that out there. You know, our experience has been the banks are just kind of like, they're saying time out as well. But I guess there are some banks out there that are trying to be proactive in the process. And I would think part of that could be is they'd like to get these loans off their books. These are 1% loans on their books, and the banks are going to want to get those off there as soon as possible. So we could have a little bit of, gnashing of people wanting different things, but you as the applicant have the control of when you apply for that. So just kind of keep that in mind.
I did see a couple questions in here that maybe the next bullet point might help answer, but banks are starting to recommend, and we have actually seen this and talked to clients about this as well, waiting until the borrowers have spent the full amount of the PPP funds on payroll, therefore reducing the amount of needed documentation. This is one thing that we had actually come across from a local bank, basically just informing us that this could be easier when they go to look at these forgiveness applications. And it also allows, there's no ifs, ands, or buts, kind of takes out the 60-40 rule. And so with the ability to go to the extended covered period of 24 weeks, a lot of individuals can do this, thus reducing a lot of that extra documentation that we would need for mortgage interest, rent, utilities, things of that nature. So just wanted to throw that point in there. It is being recommended by some local banks. And so, Lisa, anything to add on that? I know that was kind of new here in the last week and a half. So,
yeah, I mean, it just makes sense. I know I've talked to a lot of clients who are like, oh, I've got a folder and I just keep putting those invoices in there. But, you know, if banks are going to want to be able to process these forgiveness things as easy as possible, and if all they have to tie out and confirm is payroll records versus all those things, I mean, that makes sense as well to do that. So it does make a lot of sense. You know, it's just, I think, you know, again, banks are just working off the information they have. They're going to have to look at their staffing and figure out how they can accomplish all of this. And until they get some leniency and some guidance, we just don't really know what that looks like. And to be honest, just like it was with the application process, we knew what the bill said you had to provide to get the loan, but you know, 8 out of 10 banks were asking for different things and different backup. So I think that process will be the same for the forgiveness. Some banks are going to be, you know, they're just going to be more conservative than other banks and what they have to get. And really, it just really should depend on what the bill says. But that doesn't always work that way. It's a very compliance heavy regulated industry. So they're just used to checking off a lot of boxes.
And then the last bullet point there, need to weigh the option of forgiveness in 2020 versus 2021. And Lisa, I know you've actually had a couple conversations about this, so I might let you take this bullet point, but this is something for sure that we'll need to think about.
This is a big topic right now, and we're hoping to get more clarification on it. As it stands right now, and we've talked about this in previous webinars, the PPP loan, once forgiven, is tax-free income. The way the IRS code reads right now is if you use tax-free income to pay expenses, technically those expenses become non-deductible expenses. So in essence, they can say it's tax-free, but if you can't deduct the expenses you paid with it, it's in essence, it's taxable. So as people are doing their financial statements right now, that's probably something a little bit to mention. You know, this is a loan until it's forgiven. So it needs to set as a liability on your balance sheet until the forgiveness is approved. So there's a lot of talk out there that if you don't apply for forgiveness until January of 2021, will you in essence be able to push off the non-deductibility of those items? So, you know, I've talked to a lot of people, and this is a real push. I know we've been on some meetings with our lobbyist group with the AICPA, and they have mentioned that they're really trying to work on this. And basically, what the term we are hearing is double dip, right? Be able to have tax-free income and still deduct the expenses. And this would be another way for them to prop up the economy and keep things, you know, that would be another way to supplement businesses, is to allow them to have the deduction but not have to pick up the income side of it. So until we get clarification on this, and depending on what your financial taxable income situation looks like, you know, it's something to think about. If you have had a down year, then maybe it's okay to get your forgiveness approved this year and let that be the way it is. You know, if we're seeing a lot of contractors that contracts are getting pushed out, if you don't really know, I think a lot of us don't know what 2021 will look like. You know, as a general rule, we will tell people to defer income. So if you file your application in January of 2021 and that puts off that tax bill until April of the 2022, that's a big deal. So we really need some guidance on this. I hope we get clarification on this pretty soon. But, you know, there's a lot of things to weigh with this that you have to think about. And I know, you know, contractors, we do a lot in that industry. You know, you've got to think about that and maybe talk to your bonding agent, make sure they're good with that being, you know, a liability on your balance sheet that's not going to affect your bonding. You know, a portion of it will have to be classified as current depending on what's due within the next 12 months based on your loan and the payments. So it's just something to think about. And that's why I've just kind of said, let's not rush to this until we get some more clarification of what the tax implication is a big part of that. What are they going to let us do with that? Because it could be a big deal for these loans that are over the $150,000.
Appreciate that, Lisa. Going to the next slide here. It's just kind of things that we have reiterated through this entire webinar, just really hitting that pause button here as we continue to wait for additional guidance. Hopefully here as early as August 8th will be our first round of information. And then obviously the last piece of item that Lisa just mentioned will probably take a little bit later to get clarified as they're trying to push out this next round of a stimulus package. I actually did do some research last night and this morning, and so the Senate is definitely very close to releasing. They're actually going to release multiple bills today and clarify a few things that are coming in the next stimulus package. One of those items is a second round of Paycheck Protection Program funding. We're not quite sure of who will be able to receive the funds in terms of eligibility. But we have heard that it could be due to loss of revenue, things of that nature. So it's going to be a little bit more in depth in terms of how we got the first round of funds. And so just wanted to kind of note that it is coming out today. They're going to have the drafts, and then obviously it will have to go to the House and things of that nature. But that is coming down the pipeline, as well as some other things in there. So be looking out for that as well. And then as we continue to move forward, we have seen, I mean, if we went back and looked at May 15th, when that original loan forgiveness application came out, I think we were all in a frenzy because we knew that how much work was going to have to be done and compliance work to be able to get these 100% forgiven. But as time passes, everything seems to be getting more relaxed and easier. This easy application is a big time saver if we can use that one. And then obviously with them coming out with more safe harbors and extra compliance pieces that we're not going to, and help eliminate some of the things and issues that we might be having in certain circumstances. Things are just getting to be more easier as we move forward. So just kind of reiterating, hit that pause button. Lisa, anything else?
Yeah, one thing else I wanted to mention, because I don't think we covered it, and I wanted to mention there's been some, I don't think I mentioned it. If I did, I'll mention it again, but there's been some discussion. I know that banks, you know, if you went 8 weeks and then you spend it in 10, you know, I think I did mention what are you going to be held to? And that's really another big clarification we need, because if you spend it in the 10 weeks and you had your FTEs, you're really good for that amount of time and you can apply as of 10, but the way it reads, it's 8 or 24. Some banks I've talked to feel like, oh no, at 10, you can apply at the end of your 10, and if your FTEs are good, you're good then. But we've not seen that in black and white. So I think that's really something that's important. If you didn't get your spend done in 8 weeks, but then, you know, the economy changes, things close back down, there's some limitations, you know, 8 weeks may still be your best option, even if part of it's not forgivable. So I think those are things you have to weigh. So I really think, I think some clients are going to be, you know what, my 8 weeks, I've covered all the bases. I'm good. I can do it. Let's get some clarification on the taxability part of it. But some people, you might just have to run both scenarios if you can't do the EZ application and see what's going to be better for you. And that's the big thing, is just making sure, we know all the options and we find out what suits best. I read a good article this week. I think it was in the Accounting Today magazine that said, at first it was like, oh, let's get this money. And, we all talked about that in webinars, and, it's like, well, we have to spend it in those 8 weeks. And so, we had to work off the ideas that were given and the rules we had at that time. But, the bigger picture is, and I had this conversation with a few clients, sometimes you just have to make an economic decision. And if you can't continue to keep everybody on payroll, and you need to spend this over 30 weeks to pay the payroll you do need to spend, you may have to do that. At some point, it's less about meeting the forgiveness. You got to weigh forgiveness with viability. Everybody wants to still be in business as we maneuver through this. So, there's just a lot of moving parts that you have to consider, but the end goal is that we all are a viable business once we get through this, and whatever the new normal is after we get a vaccine or whatever's going to happen. So you have to weigh the two, right? It's not all about just checking the boxes and getting 100% forgiven. You may have to come out of this with 85% forgiven, and you may have a 15% loan that you got to pay over 15 years. But if that's what it takes to keep your business afloat, that may be the decision you have to live with.
With that, I think the next slide is just with questions. So I'll move to the last slide in case anybody wants to send us emails or call us with any questions, so they can see that information. But Lisa, I'll try to just go through here. I see about 14 questions on here, and I know a couple of them we've already answered. One I see on here, I do believe one of our slides talked about net profit instead of compensation. Let me clarify that a little bit. That net profit is for Schedule C or self-employed individuals. If you are a shareholder and you have a W-2, it's all based off of 19 compensation. So let me clarify a little bit. Line 9 on the application for forgiveness talks about owner's compensation. And so if you're using the 24-week cover period and you're not a self-employed individual, but you're actually like an owner employee, then if you're using the 24 weeks, it's going to be capped at the 2833 or the same equivalent in 2019 for 2.5 months for the 24-week cover period. If it's the 8-week cover period, you're capped at the 15,385 or the equivalent back when you look back into 2019 compensation. So just one question there I saw about owner's compensation. Just wanted to kind of clarify that a little bit. Let's see here. Kind of talked about if we can get a second PPP loan. We're not sure how that's going to work as of right now, but it is on the agenda in the Senate right now. So we will see, hopefully here sooner than later, how that will work.
But you can't go and get another one on the parameters of this one, right?
That's correct. That's correct.
And you cannot amend the applications. I know that's been a question I've gotten a lot of times. There was one availability to kind of amend it when they came out with some clarification on partnerships, that, owner partners income was allowed to be included. I think they did let those amounts change and reapply to make that right. But other than that, I've not seen any ability. And I talked with some bank presidents this week, and they weren't aware of any way to amend one either. So you can't go back for a second one under this act.
Let's see your question here. I see it's a specific circumstances, but we furloughed one employee. We have not brought them back because we realize now we don't need that position. Our company was able to stay open and run as usual, during all of this, do you think we can use the EZ form? That being said, and Lisa, you can correct me if we furloughed one employee, then we're going to not meet that FTE requirement. And so those three options for the EZ form, we would have to revert back to the long form and have a little bit of a reduction. Would you agree with that?
I would. I guess they do have, yeah, I think you're going to have to revert back to the long form, but they do have, I guess, the safe harbor of.
That's correct. Yeah.
If they couldn't be up and running due to, state compliance that was put on them, that you may have an out in there. Or I guess if you got your FTEs back up to where you were before in December.
That's correct as well. Yeah.
There's that safe harbor as well.
Just kind of looking through here. Can we use 100% of the loan on payroll? Yes, you can, especially if we're going to extend our covered period to the 24 weeks. And that's actually being talked about in the lender sphere as well, as that being an even easier loan to kind of get pushed through the system. So definitely something to look at. We kind of talked about the taxable issue for the PPP loans. Are the loans 1% or 1.5%? Lisa, if I remember correctly, I think it's 1. I didn't think it got changed.
I haven't seen 1.5. But things change all the time. But yeah, I thought it was 1.
So talking about restating when the EZ form can be submitted. At this point, we're not necessarily sure when that EZ form can be submitted. If we have made the decision based on kind of things we talked about today, and that's a form we want to go ahead and get prepped, we can definitely go ahead and prep that. But in terms of a lender accepting it or what their process is going to be, we're not quite sure what that looks like yet. So just kind of
most of the banks have been very good about if you were a PP applicant with them, because I've seen a ton of them come across my desk and email of kind of keeping you aware of, here's our process. I've even seen them send the actual applications out to their loan clients. So you're going to get some kind of correspondence from your bank. And if not, reach out to your lender, the person you dealt with and ask them. But I think most of them have hit the pause button for a little bit too.
I'm still going through here, looking for some questions. Any special provisions for farmers / agriculture now or in the proposed legislation? When I was researching the proposed, I didn't see anything in there, but Lisa, are you aware of some things that are out there that maybe came from the initial wave?
Not from the PPP front that I've seen anything really different. They did open up the idle loans to agriculture, that those would be processed first. So that's always something you can look into, that separate program. And then there was also a special program that's running through your extension office for, the price drop in cattle and things. So definitely contact them. They've been running those applications. I've seen a couple of those, but there is a subsidy per head of cattle and probably other livestock as well. But check with your extension agent, because there is definitely some different relief out there for agriculture. The other thing that's out there too, the CARES Act, if your farm had an NOL, you're able to carry that back. If you had some years that had income, you're able to carry it back farther than you used to be able to. So if you've got some years that had some good years of income in the past, and you had a loss in 19 or 18, now you've got some ability to carry that back and recoup some taxes you paid that's been made about. But other than that, that's really what I've seen from an agricultural standpoint at this time.
Question here asking for a nonprofit with a 6/30 year end. If you can demonstrate forgiveness, can't you record the portion you have earned prior to June 30th as income, as opposed to waiting for forgiveness?
well, we need one of our audit guys or guys or girls on the phone. I'm not sure. We'll make sure we answer that. Everything that I have read until the forgiveness is approved, which obviously at June 30, if none of that has happened, I believe it has to stay on there as a loan. But we will make sure, we do a lot of nonprofit work, so we'll make sure we address that and get that out to the people on the webinar, if that's applicable to you, or just to our nonprofit client list in general. We'll make sure we get some clarification out there to you on that. But I do believe, and Matt, I know you're over in that audit test world some as well. Everything I've seen says it stays as a loan.
That's correct. Yeah. And the only thing, if we got to a process where it would be in the process, it would just be a subsequent event footnote that would definitely be kind of recorded there, that maybe after our year end, we were in the process of getting the loan forgiven, or if we can even state that it has been forgiven, it would go as a subsequent event. But we can definitely for sure get that answered for sure. Is the SBA EZ form asked for bank routing number and account number? I'll be honest, I'm looking at the application right now, and that none of those two things are on there. They do ask for your loan number and your SBA loan number, which will come from the bank. But in terms of a bank routing number and account number, that's for sure. I don't believe that is accurate.
It really shouldn't be applicable because you've already got the money.
Correct.
The person that's going to get money is when the forgiveness happens, is when the bank gets reimbursed from the government. So, the banks are truly holding these loans. They had, as we talked about in previous webinars, the banks had to fund this out of their current, their current capital. So that's another reason banks are going to be, like we mentioned earlier, pushing to get this forgiveness done, because they want to get reimbursed and get their capital back to where it needs to be, so they can make a 4 or 5% loan versus the 1% loan they're holding. So it really has been difficult for them, and there were some banks that basically had to set a limit because of their capital of how many PPP loans they could do. So it is a strain on the financial institutions as well. So unfortunately, you as the applicant are in control of when that forgiveness happens, and if something's better for you, you've got to look at that. The lenders were paid an SBA loan fee on originating the loan, so they did get a slight bump to fund the loans, but most 95% of it came out of their current capital.
Question on here: what do they consider transportation costs? And I know this is actually one that still has kind of been thrown up in the air, but we have seen and heard of intent that would be fuel cost. Lisa, that's what you've heard as well, correct?
Right. Yeah, I've not seen anything about a mileage rate or anything like that. Everything I have seen has been actual fuel cost.
Yeah. And then, in speaking with a question here on the 3508 EZ application form, please advise which line I put the health insurance on. When you actually go look at that, that's all going to be included and lumped into your payroll number. Because if you remember back when we applied for the funds, that was all calculated in your total monthly payroll average. Your health insurance was included in there, as long as in Kentucky, their state unemployment, and then also your retirement matching from an employer standpoint. So that's all going to go on that payroll line. And like I mentioned earlier, nothing will necessarily be sent with that EZ application as of what the instructions say. Now, the bank might come back and say, can you please provide support of what that number consists of? And so that being said, we would obviously need to maintain some information to come and be basically a cumulative number there that we can make sure that we support. So going back here at the top, questions keep pumping up here. Lisa, do you see one on there that I may have missed or not covered?
Interest accrual. There's a question about when does interest begin to accrue. Gosh, I think you know, it was deferred for 6 months. So I don't know if that changed to 10 months with the Flexibility Act. I don't know that I've seen that, but the interest was deferred for 6 months to see if you could get your forgiveness applied for during that time. So I know that's what it was originally. Matt, I don't know if you know anything different.
I don't. I have to go look that one up. I assume it probably did go with the 10 months when it changed, but we can get that answer for you and make sure for sure.
So that's my off the cuff answer with a star beside it.
Yeah. I know I see a lot of non-for-profits questions here. And then I do see one that had just come in here. They have heard that the salary covered by a grant, even those of a foundation, cannot be included in the calculation of forgiveness, asking for any info on that. And then if so, can I leave that out of the original FTE computation?
Yeah, I have not seen that.
I have not either.
I've not seen that. I mean, I can certainly understand that point, but I have not specifically seen that. So that's one of those other nonprofit specialties that we'll definitely figure out and get that Q&A posted in our Q&A.
Other than that, I think we've covered most everything on here. Lisa, is there any kind of closing remarks you want to add, or?
You know, I know we've talked to a lot of clients. We've had lots of emails, and just want to give everybody, you know, I think everybody's just a little uneasy. You know, you've got the situation in the economy, and just our lives right now are so different. And so we just hoped, you know, we didn't have a whole lot of data to talk about today, but just kind of wanted to give everybody a sense of, you know, just hopefully calmness that, you know, we've got time to figure this out. I know a lot of people just like, oh, I want to mark something off my list and get this taken care of and just get it over with. And I'm just not sure that that's really the best strategy right now. I think we just have to wait and see if this is going to get easier, because there's no sense in us spending a lot of time making calculations if you want us to help you. So there's no sense of having that cost of our time. There's no sense of spending extra time on your organization's behalf if it's not going to really be necessary. So that's why just the big thing takeaway from today is it just keeps getting easier. This money is intended to, you know, keep people employed, and I think they want it to be forgiven. If they really truly want to push this $150,000 item through and basically make 85% of all applicants just forgiven very easy, that is true talk. I've heard that from too many governmental offices that they really think that's going to happen. So, you know, I think it's just a timeout, slow down, pause, which is like everything in our lives right now. Everything's a little bit slower and a little bit different. But, you know, everything was so fast paced on the beginning of PPP that I think now we just have to kind of slow down and let's let some things, you know, flow from the government, and let's just make the best decisions on a full set of information so that can be most beneficial for your business. So that's really what I think today is about. Yes, things have gotten easier. It may get even easier. So just hit the pause button and let's let some more information come out, and then we'll make the best decisions. And once the August, the 8th or 10th, August 8th.
August 8th, yeah.
August 8th. Once that happens and we digest that, we'll definitely jump back on and do another webinar and bring everybody up to date. But right now, just wanted to ease everybody's nerves and just let you know that we're still monitoring it. We're still here to help you, but let's let some information evolve so that we can make the best decisions.
That being said, I appreciate that, Lisa. Just some housekeeping things. These questions and answers, we will definitely get these answered and put back up on our website as soon as possible. So please be looking out for that, along with the recording of this webinar and also the slides. So that'll be up there. Other than that, I hope you all have a great rest of your day. Take care, and we'll talk to you soon.
Thank you all.